Good morning. Welcome to Pries Capital. You must be the new recruit.
Oh, is this the new recruit?
Yes, it is.
Awesome. Follow me, Mr. Superstar. Here at Pries Capital, we love showcasing art. The stunning bronze dragon sculpture Pico by the renowned artist Nano Lopez is definitely a showstopper. And these pieces on the walls, the legendary Michael Godard is practically a rock star in the art world. There's art all over the office, creating a vibrant, creative atmosphere to work in and collaborate in. And here is Tyler Pries, our hardworking mortgage loan officer. If you're looking to purchase real estate in the Myrtle Beach area, Tyler's the guy to know.
Looks like you have your hands full. Ashlyn, can you grab a book for him? And I'll see you at the meeting.
And here's Raj, one of Jason's right-hand guys for commodities trading. Good morning, Raj.
Good morning.
Meet the new recruit.
Hi. Hope you like to work hard and play hard. This is a high-stakes environment. Split-second decisions can make or break an opportunity. Welcome to the firm.
Don't worry about Raj. He's a quiet powerhouse, but he's critical to everything we do here. And here's the founder and real estate powerhouse herself, Tina Pries.
Good morning. How are you? So glad to have you with us. Can't wait to see you in action. We're just about ready to start the meeting for Jason's market analysis. I will see you both in the conference room.
Good morning, Jason. This is the new recruit.
Hey, welcome. We're glad to have you here. Your skill set is exactly what we need. I love people dedicated to their craft. But hey, I got to get ready for this morning's analysis, so I'll see you in a bit.
Thanks, Jason. You're awesome. Right here, we have one of our many conference rooms. And down the hallway over here, we have the intelligent and sharp-eyed Miss Jill.
Why, thank you, Ashlyn. Nice to meet you.
Jill thrives in the world of spreadsheets, balance sheets, and financial forecasts.
You'll fit right in, so go check out your new office.
And here's your new office. And over here, we have some welcome goodies for you. Just a small thank you of saying welcome to the family. Okay, so I've got to get ready for the meeting, but check out the gym over here, grab some coffee and bagels in this room to the right, then I'll meet you in the conference room.
Good morning. Thanks for joining us. Go ahead, take a seat. Welcome back to another morning market analysis. Let's get comfortable and dive in.
Wall Street has pulled this trap before, and yesterday was the perfect reminder of why preparation beats prediction. The headlines are loud again: tariffs, Davos, and political theater, but the market's real message is showing up in the structure and positioning. When you see a week like this start to accelerate, your job isn't to be heroic. Your job is to be early, precise, and ruthless with risk. Good morning. Welcome back to another Team Day Trader edition of the Daily Market Analysis. Settle in, grab your coffee, and let's prepare for today's trading session. As always, if you're new, take a moment to subscribe and explore the resources linked in the description below. Really quick shout out. Good morning. Good morning, Henry. Good morning, William. How are you guys doing today? All right. A couple things. Let me refresh this to make sure we're getting a couple not a lot of headlines. I think, everybody should know, or maybe I'm just reiterating. We do know that Donald Trump is scheduled to speak at the Davos at around 8:30, so anytime between now and I would probably say market open at 9:30. So we'll see how that plays out. He's usually always late to his any kind of scheduling to speak events. So it wouldn't be surprising, even though it's supposed to start at around 8:30, it wouldn't be surprising that, half an hour goes by, or 9:15, 9:30, and then finally he gets up there. So be on the lookout for that, and we'll be watching. Obviously, this is live, so if anything comes up. Also, and again, I know these things get kicked down, but this is just in the back of my head, just to kind of understand if volatility kicks up, is that Lisa Cook, if my memory serves me right. It's not in here in the headlines, but I thought the Supreme Court was supposed to also make a comment or rule on something with her at around 9:30, 10 o'clock, a little bit after Trump speaks in Davos. So those could be a couple. Again, the Supreme Court has been known to kick the can down the road, so we'll see if they kick that one. I would like to say that mortgage, right? You guys know I kind of track a little bit of these mortgage applications. Again, they have risen. So again, the numbers look fairly decent coming into, I really watch that, especially in the beginning of each year, that January and February is how is the public, thinking about housing, are they bearish? Are they bullish? You're going to always have situations where people get divorced, kids are, when I say kids, that's how I feel like sometimes I'm old, but when the younger youth, right, are having children and they got to move up, these certain things, like there's some things in life where not necessarily a need or a want, but more of a need. So you're going to get this normal kind of applications, mortgage applications that are in the market, but definitely from that January, February, I just want to see the rate of change. And that kind of gives me a little bit, again, it's like, what are people doing, not what they're saying. And so, you can do a survey and people can be like, oh, I'm bearish, or I don't feel really great about the economy, yada, yada. But, if they're putting in a mortgage application, it must not be that shitty. So, just kind of what people are doing. So again, just kind of throw that out there, because not a lot of people, I find it funny that not too many people keep an eye on this mortgage application. To me, I'd always think like, it's like watching building permits. It is such a leading indicator in the economy. Mortgages or housing is such a big investment in a person's life. And if people are feeling bearish or miserable, they're not going to go get a mortgage. They're not going to put themselves in that much debt. Or if they see the economy or their job's not that great, they don't feel secure in their job, they're not going to go and, they might buy a car, possibly, which is another big ticket item, but they're not going to buy a house. So anyways, it's amazing to me. I don't hear anybody hardly ever talking about the 7 o'clock every week on Wednesdays, the mortgage application. So anyways, that's my rant. I'm done. And we already talked through the bit on Trump, the news, so keep an eye on that. Other than that, there's not much. I'm not going to, this is probably not going to be a market moving event. The housing starts, construction, even though I will keep my eye on building permits. Obviously, this isn't like market event. The market's not, the S&P 500 isn't trading on mortgage applications. These are more or less, I'm pointing these out for you to, keep an eye on, especially, locally in your local area. So watching, you can't get mortgage applications local, but your building permits, keeping an eye on that. You should be able to break that down and then get your local. Again, real estate is local, so I hate it sometimes they, bucket it into national, but keeping an eye on that I think is important. Everybody should be doing that, but it's not market moving. This is not anything market moving today, neither. This, we watch this every day. I bring this up just because this is just part of my routine. But again, nothing, I don't want to get too big into any kind of context this morning. This does not seem like anything's changed. Again, we still got one rate cut for April into June, so whether it's April, whether it's June, you got one cut and nothing's changed, and you got two cuts into the end of the year. So nothing has really changed in the structure of rate cuts. So with that said, we're going to close that out. Let's get right into the morning market analysis. As of 7 o'clock, right, market was down about 10 points. We're down 12 and a quarter. There was a light negative 1.01% net short volume delta. I would look at this just kind of looking at the math and that right now. That doesn't look like it's really changed much. Maybe a little bit more on the negatives, but not much. I mean, we're still a slight -1. Maybe it went to a -1.3, but it's still light as far as short volume delta. When I wrote this at 7 o'clock, you guys can look at the price charts, right? We were on the edge of balance. Again, we're opening up a little bit below, so we're out of balance if we were open up right now. Technically speaking, we're out of balance if we were to open up right now. So we'll have to see how that plays. We're right on the edge, so writing this, it's not like, vividly we're in balance or out of balance. We're right on the edge. And we have a real possibility of a gap. So those two things, they're not distinctive, within a half, say 8:37. So within an hour, that could change. We could really start, selling off between now and then we open up with a gap, or we could come back in and then, right? So as we talk, right, the gap rules, right? If the gap holds into the open, then gap rules are going to be my primary, trade off the morning open, and then we'll have to play as we talk about these. But so those are things that you want to note. 10-day ATR, it is expanding 61 3/4 points. Again, which tells that the range is wide enough for you to, you don't have to chase, let the market come to your levels. We should have good rotation, good volatility. So bearish pressure. So things in the note. Bearish pressure inside of the range. That combination exactly where traders get chopped up because they confuse downtrend with go short anywhere. Again, FOMO is a big psychological in trading. I can't tell people how much where patience becomes your friend. Look at risk to reward setups. Again, this isn't a go short anywhere kind of moment. We'll talk about that on the trade, on the charts as we talk. Edges are definitely your friend. So gap rules are priority. That's going to take first hand, and where it rejects, where it accepts. And again, is there early selling right off the open, right? Initiative. After that, right, the primary focus is going to be day trade type 12. And then with day trade type 5 as my execution trigger when a bull trap confirms near resistance. These combination is a trade the rejection kind of morning. So we're going to let the open form, right? Again, this is going to be crucial because this is going to, where we open in a gap, not a gap, is going to be, do I take action right away? But if we don't open up in a gap, I just want to make sure I'm clear in context, then it's to let the open form, respect the gap conditions, and then hunt for traps and not get emotional, right? So hopefully yesterday, as we talked yesterday in the morning market analysis, that was really helpful. And right, we got that perfect setup where, right, we sold, and I don't have it on the chart, but we sold that retracement. Right, market pulled up, right, couldn't get in anywhere, going anywhere at that 6,900, right? That, what was it, 69 or 68.89, and I said watch that reaction at that 69.05, right? That kind of right there was the real, levels. And right, that first, and I said, and I talked about letting that IB, that initial balance form, and right, be patient. So that was a beautiful setup. Hopefully you guys took advantage of that, right? So levels in the sand, right? If the sellers are going to hold this control. And I want to say if they're aggressively holding this, from yesterday's, move lower, then sellers really that key resistance area is going to be in and around that 68.4750. So again, if we push up and it stalls there, that's where the trap setup starts to get interesting, right? The real level on resistance as far as like the must hold by the sellers is up and around 68.70. So the LVN, right, in the distribution is 68.70. This should be the marker, though. If it's aggressively selling, price won't get above 68.4750. If price does get above 68.4750 and we get right closer to that 68.70, that is the right kind of the line in the sand where sellers need to hold. Otherwise, right, posture changes, right, that changes the entire posture of the day and then forces me to stop treating rips as a gift for shorts. So above that 68.70 really has some potential, and we'll look at that on the distribution. I'll show you where right then buyers really kind of take control and we start marching our way, upwards. And I would also, it would confirm that this was just a liquidation break, and then we should be targeting in a longer time frame like the all-time highs. That would really kind of mark, where the dip, we go back into buying the dips. So I can't stress that enough. On the downside, 68.29. Oh, 68.29 is the right fiddle in the middle. It's the Fight Club. So watch that 68.29. That is the Fight Club, right, of the session. That will be where we kind of learn, and again, tempo, right, these levels is how is the market reacting. But this 68.29 is the Fight Club. So be careful in and around that level. That could be some choppiness, and that's a Fight Club area. If we lose 6,800, and really the specific level is 68.0350, right? But we lose that 6,800. I mean, this can shift from a rotation into real liquidation. And again, that's when you press winners, still with discipline, still with defined risk. And I'll show you that on the chart. So this is the morning market analysis. I'm going to delete the crayons. And if you want to take a screenshot of that so you can go back to that later on in the day or during the day, you can do that. So that's that. Take a screenshot, and then 1, 2, 3, 4, 5. Poof. It is gone. Let's slide into the volume profile chart. This is where I believe the opportunities are, in a little bit of context to what I was talking about. Sorry, I've got to get the crayons moved over. Oh, okay. This is that 68 level, right? This is the 68.70 level. So again, right? And then what did I tell you? This is Fight Club, right? So Fight Club is right here. So again, as we're in this distribution, and that's why I say we are making, right? What is the trend? Right? What are we doing? We made a low, lower high, lower low, lower high, lower low, lower high, lower low. We are trending down. And I'm going to also show you something on the MACD where you can also see clearly define that we are trending lower. It is a defined trend. So the trend is your friend until it's not, right? But we trade the trend, right? We are momentum trend traders. That's how I really describe myself. That's where the big opportunities lie. Range trading is fine. understanding context, understanding when you're in a range trade. But when you really get good at noticing trends, really good momentum trends, those are just really good trading arenas, and you can make a lot of money trading trends, understanding when there's a trend in place. So we are trending, right? This is Fight Club. And then again, as we move forward, that 68, because again, if we lose 68, this could really, right, open up and we really go down when we shrink this chart up, right? The developing, I know I talked about this yesterday, the developing point of control is 67.29. So if we lose this 6,800, 6803.50 is really the number, the actual like key level. This will be a magnet. Let's see if I can draw a magnet. Can I draw a magnet? Oh, let's see. It's kind of a shitty magnet. Looks like a macaroni and cheese. Right? This will be a big magnet down to 67, 29, 75. So again, just like yesterday where we couldn't hold, right, that 60, right, they rejected 68.89, 69.05, right? Where did we go to? We got pulled down into, right, that 68.29 area, which was the magnet here. That will rinse and repeat, right? But this will be really, this will be more forceful, right? And then we'll open up. And again, we'll just have like another 100-day range where we open and then, right, we come all the way down to 67.29. It'll be another 100-point trading range. So that's very, very, very high probable trade. And again, that day trade type 12 and really day trade type 5 kind of brings into context. So just understanding where you are contextually on the chart, understanding where to get aggressive, right? That, this could end up coming into, and I'll just throw this out here, anybody who has my day trade setups, that if you have day trade type 8, read those rules, understanding how that sets up. And, I didn't mention it in the morning market analysis, but depending on the way, if the bond market gets trippy with Trump saying something or the Supreme Court ruling on Lisa Cook, however it is, right, that could really have the inertia to really get things going. I don't want to get ahead of myself, but understanding that there is a small, slight possibility, I guess anything's possible, but probability, right? Probability of 8 coming into fruition. But the market doesn't seem, the only way that sets up, and I've seen this pattern before where the market's moving lower in a very grinding, traditional lower lows, lower highs. And then all of a sudden you'll get this. All right, so how do I want to draw this? I do want to draw this because it doesn't happen very often. So it's not like it's rare. But what happens is you get a big move, right? And then you're grinding lower. And what do we know what this is, right? This is like a spike into a channel. So, right, I call these S and C's, spike in channels, right? So you get a spike in channel. And then when you back test this pattern, the sequence usually comes into where it pulls back into the beginning of the channel from the spike down, and then you get another move down. That's how that price pattern in technical analysis, when you back test this pattern, that's how it usually plays out. Highly, high probability play out pattern. Now, what I want to talk about is every once in a while, this pattern, and again, low probability, but does come up where they come up and then you get another spike down. And then this will usually be like into a spike in a range or a spike into a flag. It usually, you don't go from like a spike in channel and then a break again to a spike and then another channel. That hardly does never set up. Again, anything's possible, but what's probable? The probable is that if from a spike in channel you get a, you don't get the retracement, and then what this defines is what the feedback of this price pattern tells you is that price, the whether it's the sellers or the buyers are very aggressive. It is that's a strong trend. It can happen both on the upside and the downside, but again, you should recognize these patterns, these price patterns, that if you go from a spike in channel and you do not get the retracement back to the base of the spike, and from the lower end of the channel they rip it again down, that is telling you, that's feedback, right? It's a feedback mechanism that, right, the market is strong in a selling atmosphere, selling trend. The price action is the feedback mechanism. So understanding that, I just wanted to point that out, that again, that pattern does present itself once in a while. It's usually rare, but I have backtested that and seen and witnessed that pattern a few times in my life. So I just want to call that out because I don't want somebody to be surprised. And I don't want somebody to get into a position where maybe you're aggressively buying and you just think to your head, like, we sold off so much, it can't sell off anymore. And then it just rips your face off and, you just blow your account up. The whole point of me coming on here is, one, to tell you, what I'm doing in my trades that I'm targeting in the day, and hopefully you learn a couple things. But if I can do anything, it's to help illustrate risk and honoring your stops, because this trade doesn't happen very often. But if you just are always thinking like, oh, it's a spike in channel, and I've back tested that, and the probable trade is it to come back to here, right? And so you're buying this, and you're just so your conviction level is high because this, say, is a 83% chance of probabilities, right? And so you're just, it's not 100. And then it goes lower and you just get this move and you're just like, deny, and you don't honor a stop. This thing can just go and you just, ruin your account. So it's those things that hopefully I can, save somebody. I can't save everybody, but, and maybe you have to take the hard way. I mean, don't get me wrong. In my life, usually it's the hard way that I learn. So it's not so much of the easy way. So, maybe you guys are somewhat like me and you got to learn the hard lesson, and then, and then it sticks in your brain and you never get out of it. With that said, let's go to the trigger chart. This is, again, if anybody doesn't know, and sometimes I always feel like maybe a new person is, somebody new to trading. So again, some of you guys have been with me for a while, so you know these things. And but I have this impulse where I feel like I have to constantly go over certain things as basics because some people are new and they just don't know. But the MACD is a centered oscillator, right? So you're going to get banded oscillators as indicators, and you're going to get centered oscillators. The MACD is what's considered in trading a centered oscillator. Now, whenever there's a trend, right, you'll get this where it does not zero out, right? And so this is, again, an indicator, and it's an oscillator indicator that's then telling you that there's a trend where, right, you don't get this retracement back to the 0 line. This oscillates down at the lower band, right? And this can play out down here for a while, and price just keeps on, right? Think of a rubber band, and it just keeps on, you're stretching it, you know what I mean? But then you're stretching it and you're holding it. So it's not, contracting back. It's you're holding that rubber band, stretched. And that is an indication of a trend. So again, this is an hourly chart. Usually I have my trigger chart on a 5-minute, but we just left the volume profile chart, and I wanted to show, how this, what this indicator is telling us. And again, like, this is a strong trend. Be careful if you're bullish, right? Because this could, unfold today, and really, they could just rip this again. So be cautious if whatever you're taking, a sell trade or a buy trade, I think the one thing, if I can be clear on today, is respect your trade setup, respect your levels, and respect your stops. Because in days like this, if you're selling, right, and say this is a low, and this is like the inflection low, and then we do rip it back up, right? You just don't want to be like, oh, I'm just short and that's it. This is extended. We are extended on the sell side, but there is markers that are saying this is trending. So it also doesn't say to be fading, right, the trend. If I can, hopefully, be a little bit more, I don't know, if I can just kind of help. But with that said, let's dial this into, because I want to dial into day trade type 5. I want to gap, right? It does look like we are inside, right? So if we are open now, we are in balance, right? In balance. And then we have no gap, right? So no gap as of right now. So, right, that does change a little bit. Again, we kind of then, patience become our friend. We're in Fight Club, right? So this is Fight Club. So again, if we're in balance and there is no gap, patience becomes your friend, right? This is Fight Club, and there's no big rush for me to initiate a trade in Fight Club, right? Then I'll be looking for day trade type 5, and I'll be looking for the edges, right? The edges, and watching those edges clearly. If we open up in a gap, right? If price opens up, if Trump starts talking, and right, the market gets into a little volatility, again, we could open up, and I'll show this on a day chart, but we could open up, right? Yesterday was a gap, and then we get, gap and then gap down again. So again, the volatility in this arena where we're at with the VIX at 19.93, right? You do have the potential where if this is, again, stress again, for in a strong trend, just like when you're in a strong trend up, if you're in a strong trend up, what happens? You get a day that gaps, and then that's what catches everybody offside, and then it gaps again. You get like 2 gaps back to back. That same thing has a potential here, but it's on the opposite, right? It's on the downside. So, how we open, and it's 9 o'clock, so within the next half an hour, that is going to be, right, your assignment is where are we opening, right? If we're opening in balance and there is no gap, patience, let the IB form, trade the edges. If we open in a gap, right, then we have to, we got to work on day trade type 12, right? Gap rules, then day trade type 12, and then making sure that doesn't go into day, or I don't want to say make sure it doesn't go into, watch to see if that transpires into day trade type 8, like I talked about earlier. And again, this is Fight Club. There's a no-go. If we open up in a gap, say somebody starts talking or market doesn't like anything, and we're down here at that LVN, right? watch as we open up, and then we had yesterday a gap, and then we open up again, and it's a gap and go, and then this go, we get underneath this 6803, and like I talked about, and you saw vividly on the volume profile, we're targeting down into 67.29. Again, though, I'm getting ahead of myself. We'll have to trade this market the way it sets up on a day chart, and we'll close out here. So let's go to the day chart, and we'll kind of sum it up. And I want to open this up. And I want to go to the SPX. Right? So again, and let me change this so this is somewhat, right? You get a gap, and then within the next half an hour, if Trump comes on and he says something ridiculous, which does tend to happen, and we open up here, right? This could easily come in and get another move where there's no wick, right? It just open and then goes, right? And you do not get a wick. It's just a solid body candle. We open on the highs and we close on the lows. And then we have a gap here, and then this opens on a gap here, and it really goes. That can happen, and we're in the context of that being possible, being probable. I don't want to say, right, again, anything's possible. I'm always thinking of probabilities, but in today's context, it can be fairly probable, a decent probability to kind of understand what's happening. Otherwise, again, we could still open up gap or not gap, but like just go, and there is no gap. Again, if this trend is strong, which we've highlighted, and we are trending, that is again probable. So otherwise, then you just have to, if we open up and we're open up somewhere down at the lows, right? We're opening at the lows. So then it would be to execute patience and see if we get a wick up, right? Have something that we can lean against on risk reward, right? To short, a kind of move higher. And then as the day goes on, is the day just set up like something like that, where it's a doji, we kind of buyers pierce up into some highs, pierce down into some lows. We trade in a range in a, again, 10-day ATR, 61 points. So if we trade in that kind of range, and that's it. Or as the day, as tempo comes in, as the day comes in, watching of course I got them on. So watching your market internals, and are we, right, are we building, the ticks to the downside? Is the ADSPD down here at negative 400, somewhere at negative 400, negative 500, if that's the case, and we get the Vold, pushing down, we get another day like this into today as a look, right? That is, right, that's feedback telling you something, right? If not, and we sit in here and we do something like this, or it's something like this, then again, that's that trading range where you get push and pull, right? And you don't get the really strong move. So that's the context that hopefully you read in today, and that's that kind of assignment. Other than that, I don't think there's not too much to talk about. I like the way crude's running right now. Gold is posturing. Looks like it's consolidating. Let's look at, the flex chart. Right? Watching this in the corner, I'm watching crude, this posturing. If I break this out, this is only a 5-day hourly, but, this moves up, and right, we're targeting 62.31 and then see if we get a push past 62.31. I am long in oil, so I have a position on oil, so I am long as of right now. Gold, I have no position on, but again, we had this trading range down here, and then over the weekend, we've made an advance, right? So we're consolidating up here at these highs, right? My risk, the way I trade, I don't like buying high. This is already broken up. I need a pullback and then a go. So, you know, I'm not one to just short a bullish trend, so I'm not blindly shorting this. I'm not looking for this to short. What I would be looking for is if the opportunity presents itself where we've broken out of that range from back last week that built out for almost like a week and a half, and then we've pushed out, you know what I mean? I'm looking at, right? I would be looking at then getting long as a pullback, hold the pullback, and then a push out, right? That's good risk to reward, right? You know where you're wrong. If this gets sucked back in here, right, then it's easy to demonstrate good risk to reward, and then you're just out. And this was just one big trap on a longer time frame, and then right price comes down. That's getting way ahead of itself. You need one thing to kind of, you know, there's a sequence to things to happen. So, you know, we need the sequence to kind of show us that first. Right now, this just shows where we pushed up and then we're consolidating. Not a good risk to reward. This isn't enough risk to reward for me. I need something more lucrative. So we need to come back down in here to 47 for me to kind of be, you know, to kind of set that setup up. Dollars down. I'm watching 10-year. You know, right? We did get that push up. We've talked about this many times on the 10-year. Let's break this open since we got a little bit of time. I'm sorry. I got to bring my crayons over here. Let's bring the crayons over. Right? We talked about this setting up, and I had mentioned that, you know, there's this discussion where people were like, oh, rates are going to go lower, yada, yada, mortgage rates, interest rates. And I am still been under the impression that inflation is still a problem, but now, you know, debt is still a problem. But when I looked at the chart, I just see this chart, you know, being bullish on rates, bearish on bonds, right? So we ripped up in 2024. This was when the Fed started cutting rates, and we got, you know, we went all the way to 4.8. And then, you know, we have in 2025 been this malaise down. But when we got down here into the low fours, right, it just looked like they tried once, they tried twice, they couldn't get it. And then we consolidated. And this just looks like some accumulation. I don't want to say accumulation because this is just the 10-year note, so I don't want to call that. But it just looked like the chart pattern in rates looked like rates were going to go higher, and then lo and behold, and again, maybe it was just you needed that reaction, you needed that catalyst, and that catalyst being Trump with Greenland tariffs, and now we're shooting higher, right? We broke out of this range. So again, now don't get me wrong, I say bullish is always like, oh, the rates came down. But if it does come down, right, it's like rates come down, they hold that level, just like we always talk about patterns, and then they shoot back up. And again, we, you know, so again, this is a day chart. I went back 2 years. And so again, we're just, this price pattern just screams 2026 higher rates, not lower rates. Again, false breakout, these things can happen. But as the chart right now, rates, the market is saying, you know, rates higher, not lower. So throw that in there. Oh, let's go take that back. Other than that, I don't have anything else. Banks, you know, banks don't look that good. Still a little bit of pressure on the banks. Oh, I know what I wanted. I do have a trade idea today. So I was looking, I know I gave you guys a trade idea yesterday. Let's go back to the dashboard and then we'll close it out there with this trade idea. I am looking at CEG. And then I want to break this out to 2 years. Actually, let's do this. Let's do this. And then let's do CEG. Right? And just like I talked about yesterday, right? That weekly chart. And then again, where are we? We're just tapping that 40. So again, on a risk to reward, day trade type 14, right? On the weekly chart, and I call it day trade type 14, even though it's not a day trade. Day trade type 14 is technically a swing trade, and it works off of a weekly chart, right? But this setup has this really, coming back, and this is just setting up for a good risk reward. If you're wrong, right, it's easy to, just get out of the trade, keep your stop fairly tight, and then I go to like a day chart. So again, looks like we're opening up at like 300, right? Here it is, 302. So 300 to 302. And again, stop is underneath, usually if I initiate a trade based on day trade type 14 off of the weekly chart, the stop is underneath yesterday's low, right? So I haven't initiated the trade yet, but I am watching this as a trade idea. I really like this, and I'm going to watch how today unfolds. Again, if we get just the indexes selling off and we get day trade, they just really sell off, then, I'm going to be a little bit nimble, see if we get underneath yesterday's low. If the market kind of catches itself here, right, which we talk about, or a possibility or probability where it can catch itself. If it does, this is setting up again where we talked about in the very early of today's session, where I said, today's very important. Whereas, do we get above and we hold that distribution and we get above 68.70? If we get above 68.70, and the market yesterday was kind of, that's all that we're going to get, and then we kind of catch ourselves, right? Then this is a really good setup here at CEG. I did enter in yesterday on DBA, so I am right, that got thrown into the legacy account, and right, whenever I do probe and I get into a trade, especially when I throw that into the legacy portfolio, that first week is highly watched. So I am highly watching DBA, monitoring that on a day-to-day basis when I write, and then from there I don't like it. I'm either right or wrong, and right then, I just put my stops in, and then if that first week, if I am right, and then price tells me I'm right, then I kind of let the legacy portfolio is the investment portfolio. I'll let that kind of play out. But, whenever I get into these, I just don't get in and then say, oh, it goes into the retirement portfolio, and I sit it and forget it. I don't. I do monitor all my positions. I don't like losers, and I'm either right or wrong. If I'm wrong, it's GTFO. It's get the fuck out. Otherwise, it's stay in, and right, you got in an inflection point and a good risk to reward inflection low, and then right, the market kind of moves. So anyways, I do like this CEG. Again, this isn't investment advice, yada yada yada. Natty Henry says Natty is going over, let's go to the commodities. Natty's going over $5. Let's do 7, and we are gonna do, I just had it. Where is it at? Right there. I'm like, where is it? Oh, I gotta do this. Yeah. I mean, it's over $5. We've had a little bit of a pullback here. I would just, I'm still, again, I am bullish commodities. So, Henry, you know me, I have, I'm bullish commodities. I'm bullish. I'm a little bit, have this, feel like inflation is sticky. I think the way we're doing geopolitics, maybe it hasn't shown up yet. That was the whole thing of 2025. Oh, Trump with tariffs, yada, yada, yada. And it's not, we're not seeing it. These things have lags. You make a decision macro, in a macro sense, macro geopolitical. That's not like day trading. These things don't move on a dime. We're not trading, 5-minute chart and we're thinking macro geopolitics. These things is like moving the Titanic or anything else that ever, these analogies that people talk about, and these are slow moving things. So, I have been under the belief that inflation, the way that the way that fiscal is structuring their decision making, the macro backdrop, right, is some inflation. So, yeah, I agree with Henry. I know Henry is on these commodities like a hawk. So, if anybody wants to, you can, I think his Twitter handle is the same. Am I right, Henry? Your Twitter handle is the same as what's there on YouTube? I could be wrong. I know it's Traveler of the Cat, but anybody should follow Henry. He's a good guy and a very smart whippersnapper. So yeah, he's definitely on metals. Very smart when it comes to a lot of the metals, a lot of the gas trading. So if I give him a shout out, he's worth shooting the shit with. And again, real trader. So with that said, we'll end it there. I do like this. And again, we're right. What are we doing? Higher highs, higher lows. It doesn't look like when we do break out of a higher high, you do get kind of some retracement. So there is some good back and forth, although we're holding, on a day chart, this is looking really good where we consolidated and now we're moving up on the moving average. We're right here at the spot. Again, you can get some pokes below, but then the main hold is this holding and, and go higher. I mean, it would not surprise me to, in the future, this is at $10. Something like that is not surprising. Oh, wait, no, it's Garfield reference. Oh, it's Garfield reference. There you go. Giant tiger cat. There you go. Garfield reference. So anyways, as always, learn, trade, profit. If you're based in or around Myrtle Beach or you're vacationing, right? Come and check us out. See us personally. The address right there, Suite 101, 100 Star Drive, Suite 101 in Myrtle Beach. Phone number, email address, websites, all right there for the resources if you want to, check it out yourself. Otherwise, we will see you guys tomorrow and have a great trading day. See you guys.